Hi students, in this video I'm going to prepare the income statement, statement of financial position and statement of changes in equity of ABC Limited Company for the year ended 31st of December 2019. So since I have read the requirement, the first thing I'm going to do is prepare the income statement format. So in the exam, make sure you write the full name, income statement for ABC Limited, year ended 31st of October 2019. Revenue, I'm going to leave some space and then I'm going to write less cost of sales. In cost of sales, I have opening inventory. I have purchases. And then I'll leave some space and then I'll write less closing inventory. Then I'll have my gross profit. Then I'll have less expenses. Interest and tax. And this is the format of income statement. Next, I'm going to draw the format of statement of financial position. Non-current assets, current assets, capital, non-current liabilities, and then the current liabilities. And the format is complete. Next, I'm going to draw the statement of changes in equity format. Well, in this question, I do not have share premium. I do not have retained earning, revaluation reserve. So on the top, I will only have three headings: share capital, retained earnings, the total, statement of changes in equity. Balance brought down, balance carried forward. And my format is ready. Next step is to pick up the figures from the trial balance and record them in the relevant format. So you can see that the first item I have is a loan of 28,000, 8% loan. Next, I have accrual of 292. Remember, notice that I am recording them in the first column. This is not a debit or credit column, it's just a presentation. So I'll have two figures over here and I'll write the final over there. Next, administration expenses. I'm going to open a bracket and I'm going to write 6888 because I know that there will be some changes into this administration expenses. Next is cash, 19308. Next is distribution expense, 4900. Again, I have opened the bracket, I've written 4900 because I know that there will be some more changes into it, either addition or subtraction. The dividend over here, I'm going to highlight it. This dividend and the other dividend, which is interim dividend. Interim dividend means dividend given at the middle of the year. These two dividend payments will come out of the profit of the company. Therefore, I'm going to leave these two figures for the moment. Interest is 1120, and I'm going to open the bracket. I'm going to write 1120. Next, I have opening inventory of 8932. And then I have plant, property and equipment of 79,760. Property, plant and equipment. And then there is an accumulated depreciation of 43,560. Notice that as I pick up any figure from the trial balance, I tick it, making sure that I do not record it again by mistake. Purchases is 65,552. Retained earnings for the last year and previous years is 6930. That will become part of my capital. $6930. Again, I have written that in the first column, and I'll show you why I have written that in the first column, because there will be an addition of profit coming from the current year into the retained earnings. And out of retained earnings, we will be paying the dividend, both the final and the interim. The final was 1080 and the interim is 780. Next, so now I have picked up these dividend figures and I have subtracted them from the retained earnings. Next is return inwards. Return inward means it's a sales return. I sold goods and some of the goods have come back. Return inward will be subtracted from my revenue, and that is 688, and I'll leave that as in bracket. Later I'll find out the revenue figure and I'll record it over here on top of it. Next is return outward, which is 446. Return outward means I bought some goods and some of the goods were broken or not up to the standard, and I return them back to the supplier. That needs to be subtracted from my purchases. Next, I have my sales figure of 93,554. Then I have a share capital of 18,000. And I'm going to open a bracket and I'm going to write 18,000. Why? Because later I know that there will be a bonus issue. There is a bonus issue. A bonus issue is a free issue of shares. And I'll deal with that later. Next, I have trade and other payables of 2694. And then I have receivables of 4468. Receivables are my current assets, and therefore I will record them in my current assets. Now you can see that I have picked up all the figures from the trial balance, so I do not need this trial balance anymore. Now, dealing with the adjustments, I am going to change the color so that you can see where the adjustments are recorded. It tells me that the share capital of the company consists of ordinary shares with a nominal value of £1. So each share is for £1. Next remember that when I was dealing with the trial balance, I went into a sequence starting from the top, going line by line. I did not jump. Similarly, with the notes, I'm going to deal with them line by line. So, whereas if I wanted to jump, I could jump from this note direct onto this note, but I will not. The second note says that inventories at the year end, it was valued at 9974. Remember that inventory is recorded in the income statement as well as in the current asset. So the reason I'm using red pen is just to show you that where the adjustments are made in the financial statements. Next, we have third point, which says company paid 1,024. Well, it is 1,024,000 for 1 year insurance on 1st of February 2009. This is due to expire on 31st of January 2010. So insurance, working number 1. Notice that the insurance was paid on 1st of February 2009. And it is due to expire on 31st of January 10. In the question, the year end is 31st of October 2009, which is over here. So how many months there has been from 1st of February until 31st of October? It is 9 months. 9 months. And the 3 months are falling in the next period, which means that the 1,024 we have paid 3 months belongs to the next period, so it's a prepayment. And the amount is 256. prepaid. So insurance has to do with administration, not distribution. So anything we have paid in advance should be subtracted from the total. So this 1024 is sitting somewhere in the 6888, but not all of 1024 is an expense for the year. Out of that, 256 belongs to the next period, so we need to subtract it from here, from the administration expenses. At the same time, we need to record it as a prepaid insurance. $256, because prepayment is an asset. Next, the company hired a vehicle to distribute finished goods locally. It was able to negotiate a deal with the local company for the period from 1st of September until 30th of November 2009. Working number 2, higher cost. And the period runs from 1st of September X9 until 30th of November X9, and the year end is somewhere in the middle. Well, September and October will fall somewhere over here. 31st of October X9. 2 months, 1 month, and the total amount negotiated and paid in full is 198. So 198 divided by 3 multiplied by 1, right. Wait, let's see if we have paid for it. Right, you see, it says the invoice. The invoice was received on 6th of November 2009. That means at 31st of October 2009, we still had to pay for this 2 months. So that means it was outstanding. So if we read again, this invoice was received on 6th of October 2009 and paid in full on 1st of December 2009. So that means it was paid after the year end. But we are not dealing with when we paid. We are looking at what is the year end, and at the year end, did we pay for it or was it still outstanding? And it looks like it was still outstanding. Therefore, 198 divided by 3 multiplied by 2 is £132. That 132 is accrued, means we have used the vehicle for September and October for 2 months, and we have not paid for it. Therefore, we need to record this 132 in distribution by increasing expenses for higher cost, because it's a vehicle for distribution. That's why I have recorded that in the distribution. At the same time, we have to record it in the current liabilities as higher working number 2132. We can mention working number 2 here. Working number 1. Your workings in the question. Next is interest on bank loan for the last 6 months for the year has not been included in the trial balance. So the interest on the loan, you can see that the loan figure was the first figure, 28,000 multiplied by 8%. 28,000 multiplied by 8% gives us 2240. But how much interest was recorded? 1120. So that means the remaining balance is still payable. And the double entry is interest expense debit by 1120. Payable is credit by 1120. It's payable. Next is the company made a bonus issue of 2.5 million ordinary shares out of retained earnings. Oh, remember that all the figures are in million. Therefore, I should mention 000 over here. $2.5 million shares, ordinary shares, were issued for free. For free. There was no cash coming into the business. And therefore, note number 1 over here has a connection with this note. Because note number 1 tells me that each share is for £1. So that means I have given 2.5 million shares, which cost £1. And where is this cost coming out of? This cost is going to come out of my retained earnings. Issue. So you can see capital is increasing, whereas retained earnings is decreasing by 2.5 million. Last one is the tax. The tax for the year is 1960, and usually we pay tax after 1 year. Therefore, I'm going to record 1960 over here. 1960. And because we pay tax after 1 year, therefore 1960 should also be recorded in the liability. And now you can see that all the figures have been recorded, all the notes have been recorded in the financial. Now I'm going to close it. The total of sales minus sales return is 92886. And the total of opening plus purchases less closing less return outward is 64064. This is my cost of sales. When cost of sales is subtracted from the sales, the gross profit is 28802. Administration expenses are 6632. Distribution expenses are 5032. The total of these is 11664. When we subtract all our expenses from the gross profit, we calculate profit before interest and tax, which is 17138. Then we subtract all our interest and we get profit before tax, which is 14898. We will subtract the tax. I'm going to move this figure here, and we get profit for the period. Profit for the period is 12938. Comprehensive income, there was no revaluation or anything. This other comprehensive income is going to become part of the retained earnings. 12938. Profit for the year. Now let's close our statement of financial position. The non-current assets, property less accumulated ACC depreciation, is 36,200. Assets is 34,006, and therefore the total assets are 70206. Capital is 20,500. The total of retained earnings is 15,508. The loan figure is the same. There are no changes in it. I'm just going to move it forward. And all the current liabilities, total of current liabilities is 6198. Now we are going to add the capital plus retained earnings plus non-current plus the current, and that is 70206. You can see that all the assets are equal to capital plus the liability. Next thing is updating our statement of changes in equity. Share capital opening balance was 18,000, and notice that I will pick up all the figures coming from here. Retained earnings opening balance was 6930. Bonus issue 2500, added in the capital and subtracted from the retained earnings. Profit create will be added in the retained earnings. Dividends, there are dividends 1080 and the interim 780. The total is 15508, 20,500. So preparing statement of changes in equity is very easy. You just pick up the figures from the statement of financial position capital section and record it. And this 36008 is the total of 20500 plus 15508. Right, so this is a complete solution. I hope you'll find it helpful. Thank you very much.